It's the 13th of August 2011, and happy Saturday to you all. This video is about market correlation, the relationship between different markets. Okay, we are in a global market. We want to talk about the correlation or relation between each market. Okay, markets correlation. For those of you who are new to us, we are the TSTWSYS08 traders, and our website is www.stochastic-macd.com. For every trade, we will use the 5% money management rules and also apply stop loss in all trade. Before every trading decision, we will use the trading triangle, okay, the market first, the sector, and then the individual financial instrument, the leaders, the news, and the fundamental. This is the heart of the trading triangle. The leaders, the news, and the fundamental can change the dynamics of the market at any point. Okay, very important. The market is represented by the S&P 500. This is the monthly chart of the S&P 500. We can see that from 2008 up to 2009, or somewhere here, beginning of 2009, the S&P 500, which is the market, is going down, and then it went up to this level here, give a pullback to this level, only to continue here. Now it's going down. I want you to pay attention to this chart here. A downtrend, went up, pulled back, up, and now it's going down. We want to see the relationship between the S&P 500, the Dow 30, okay, and all the other major indices. Okay, this is the S&P 500 on a monthly chart, and as I told you before, the market control the sector and also the financial instrument. The market will control any other market indicator. Talking about the Dow 30, the Nasdaq 100, the DAX 30, the CAC 40, okay, the S&P, the FTSE 100, okay, and the RSX, the Australia Index, okay, very, very important. Okay, so we're going to look at the FTSE 100, which is the index, the major index in London, okay, United Kingdom, in Great Britain. We can see that the same pattern like S&P 500, it went down, okay, and then it went up, and then it pulled back, and then went up again. Now it's going down. Okay, this is the monthly chart of the FTSE 100. We can see clearly that the FTSE 100 and the S&P 500 are positively correlated. Okay, now we want to look at the DAX 30, which is represent the 30 stock in Germany, DAX 30, DAX 30. Okay, now we can see that again, the same picture on the monthly chart, a downtrend. Then it went up, a bit of pullback here, went up, now it's going down, following the same pattern like the S&P 500. Talking about the trading triangle, the market is the leader, market controlling every other financial instrument. Okay, we want to look at if you are trading currencies. We want to show you here that the market control also, okay, the currency, because some traders think that because they are trading stock or they are trading currency, they don't want to know what the market is doing. They don't want to know what the S&P 500 is doing. We have here, okay, the Australian dollar, US dollar currency pair on the monthly chart, a downtrend, went up, pulled back, and went up again. Now it's coming down. This is again the same pattern like the S&P 500. We are talking about the relationship between all different financial instruments in relation to the market itself, which is represented by the S&P 500. If you are trading crude oil, you will pay attention to the S&P 500. You see this is the crude oil, daily US light crude oil. You can see that we have again on the monthly chart the same pattern, a downtrend, went up, give a bit of pullback, and went up. Now it's coming down. If the market is in overbought zone, we will give priority to selling. We are not interested to swing trade to the upside in the overbought zone. When the market is at overbought zone, we want to look for opportunity to sell. On the other hand, if the market is in oversold zone, we want to concentrate on financial instruments that we can buy. We are trading first the market, so if the market is going down as it did in 2008, we will be busy selling. If the market is going up, we are busy looking for financial instruments that are going up. and we are busy buying. On the other hand, okay, if the market is going horizontal, we are busy looking for financial instruments that are consolidating. Right here, as I show you, from the S&P 500, the FTSE 100, the Dow 30, this is the Dow 30, you can see a downtrend, pull up, a bit of retracement here, and then up a same pattern. This is the Dow 30, okay. You see the same picture. This is the FTSE 100, okay. Here we have the ASX, okay, AXS, the Australia 200. You see, this, if you live in Australia and you think that you do not want to know about the S&P 500, I have a good news for you. Right here, you see the same pattern, okay, for the Australia ASX, okay, a downtrend, went up, pulled back. Here again up a bit. Now it's coming down like the S&P 500. Same thing for the CAC 40. If you live in France, the same picture. Here we have the Dow, the DAX 30, DAX, DAX 30 for Germany. Okay, as you can see, a downtrend went up, a bit of pullback went up. Now it's coming down like the S&P 500. For those who are trading currency, we see here again for the Australian dollar US dollar currency pair, we are in the global market. That's why I said to you that Nikkei, okay, 225, okay, in Japan there was a recession. First, it's a global financial market, okay, and then we have a recession in the United States, okay, and also in Great Britain. There will be a recession in the Eurozone. Whether the Eurozone is affected by the credit crunch or not, it will be affected one way or another. I heard some of the analysts talking about that the Eurozone is healthy. It cannot be healthy on its own, okay. We are talking about a ripple effect in the global market. The Nikkei, the Japan went into recession. United States went into recession. Great Britain was in recession. France will be in recession. Germany will go into recession. Italy will go in recession. Using a common sense, okay, in this market, you will be able to make excellent trading decisions. Talking about a market, a correlation, relationship between the S&P 500 and all the other major indices. As I show you always, when you are about to make a trading decision, you will use the trading triangle, the market first, then the sector, then the individual financial instrument, the leaders, the news, and the fundamental will change. This is what we call the kitchen or the machine or the engine of the trading triangle. Apple is a market leader, Google is a market leader, ExxonMobil is a market leader, okay, and we are telling you that the news, the fundamental, the leaders can perfectly change the dynamics of the market, but the market will impose, okay, the patterns on every other financial instrument, as we have seen here, the FTSE 100 on the monthly chart, okay, the Dow 30 on the monthly chart, the DAX 30 in Germany on the monthly chart, the S&P 500, which is right here, the leader, the market itself, the crude oil, okay, also following the market, and also, of course, currencies, the Australian dollar US dollar currency pair, the Euro USD, will follow the market. We are in a global market. Do not believe all the blah blah blah. Keep your eyes on the market. The stable data in the market is that the market will control. The trading triangle is a stable data in the market. The market will control the sector will control the financial instrument, but the leaders and the news and the fundamental will change, okay, the dynamics of the market. There was a recession in Japan, a recession in United States, a recession in Great Britain. There will be a recession in France, in Italy, in Spain, in Germany. This is just what we call a ripple effect, the relationship, the correlation between markets. This video is about market correlation, and it's primarily for the TSTWSY08 traders. This video is for educational purposes only. It's neither a solicitation nor an offer to buy or sell any financial instrument. I hope you enjoyed this video, that you put into practice in order to cream the market consistently. We are the TSTWSY08 traders. Thank you for watching, and we will speak to you very soon.